Alright, should we just jump right in it? Totally immerse ourselves? I'm pumped about it.
Can you hold on like 1 second?
Jeez, Draker. We'll get done quick, I promise.
Are we only doing 5-2?
Well, 5-2 is real short.
Let's just do 5-2. Yeah, let's just do 5-2, because I have a test to study for.
Oh, do you?
Yeah.
Oh, why didn't you study over the weekend?
I did, but I need to study
Instead
more.
you're out driving around town and cruising with your windows down.
Nope. I didn't even leave my house yesterday.
You didn't leave your house?
Got the Indians coming to town tomorrow.
Got the Marion engines? I got a new shirt. I like it. You know, you're emphasizing the new shirt. My mom came to my house yesterday, to see the kids, and brought me a new shirt. Thought I needed one.
Hey, like the whole Subway server. Good. Not like that yet. It takes me long because I'm like slow at turning and stuff. That's terrible. I got like 800 or something my first time. Kept running into the wall. Really.
My highest is 40,000, I think.
40,000. What's your multiplier at?
8?
All right.
So
You ready to start?
Yeah.
30.
I know.
Fuck the script.
Oh, yes. Nothing to it. Let's see what we got here. That's part of this all under recording. Isn't recording?
Alright.
What? Not recording. Perfect.
What was I going to grab?
A pen? Because I don't think you have a pen up here.
I don't know, go back and you'll see what you needed to grab.
Put it on the flash. Better on the school.
I'm gonna have to edit this video out.
You don't have a pen.
It's right there. Got it. All right, Coach Struve. It did kind of start like that. It did. Okay, so we created what? What did we make? Income statement, right?
Yep.
So now we're going to take that information that we had on the income statement and we are going to use it to help us make decisions about our business. So most companies have standard numbers that they know if I go over X percent, then we're going to have problems. So if we meet our parameters, then we know that's an acceptable result. And if we don't, then we need to then try and determine what we need to do differently. Hi, Miss Story. How are you?
Freezing. It's cold outside.
It is cold outside.
First date, 24 years Saturday night, and guess who I see at the bar? Laura.
Oh, was there a band playing?
Huh?
Was there a band playing? They were scouting the band for their wedding. Were they good?
I was at Red Bear, which is where I saw them at.
Yeah.
The band was like, they were great.
Were they? I think that's what they were gonna check, see if they liked them.
Gotcha. I just thought it was hilarious. I'm like,
Ronald Clues.
And he's not even 24 years old. Okay, so
I was like, no,
our cost of merchandise sold
took the jacket off, walked inside.
is not supposed to be higher then 53%. What is our cost of merchandise sold if you go back and look at the income statement from 15-1? What was our percentage for cost of merchandise sold?
44.9%.
Yes,
52%. Where do we get that? Well, we get that from cost of merchandise sold, 52%. So, we put it in. Is that an acceptable result
Yeah.
by our parameters? Yes. It's acceptable, so we don't need to take any action. Gross profit on sales, 48%. Is that an acceptable result?
C.
Yeah. No.
No less than 47. So none. Okay? And then it's also going to talk to us a little bit about our earnings per share. And earnings per share basically means it's the dividends. We talked a little bit about that. If you have a dividend, there's two ways stocks make money. Number one is you buy it low, you sell it high. Number two, if you have a stock that pays a dividend, what you'll do then is you'll take the number of shares that you own and then you'll say, okay, we're going to pay a dividend to our shareholders of X dollars per share. And what we usually do is we'll have to figure our net income and then our earnings per share, and then we'll pump that out. So it says Interstate Tires currently has 110,000 shares outstanding. So outstanding shares, that just means that's how many we have sold. It says our net income after federal income tax, looking for that number. Well, that number I just had somewhere is on your income statement at the very bottom. Last number is right here, 62,907.35. So I'm going to put that in here. 62,907.35. So if you want to figure this out after the taxes are all said and done, you take your net income after tax, you divide it by the number of shares that you have out there, and that's going to give you an earnings per share. So 62,907.35 divided by 110,000 gives you what? 0.557. So 57 cents per share is your earnings. Well, 57 cents per share doesn't seem like a lot, correct? It doesn't to me anyway. So the difference, or what you got to take a look at, is what's your price earnings ratio. So if you have 57 cents earning per share and your shares are only valued at $1, that's a huge increase in your price per share. If your shares are $50 a share and your price goes up 57 cents, well, that's less. That's a 1% growth. So you got to take it into consideration. So what we're going to do is we'll figure out our price earnings ratio. So our market price tells us in the book is how much? $13.75. And our earnings per share is 0.57. So a price earnings ratio is 13.75 divided by 0.57, and that gives us 24.12. is your price earnings ratio. Price earnings ratio, typically, the standard is 20. So anything that has a price earnings ratio of less than 20 is considered an underperforming stock. Anything over 20 is acceptable. Anything over 30 is phenomenal. So this is right in the acceptable region. No, I bought a bunch of stock for a company, and I stopped paying attention to it because I just gave up. And I bought it for 3 cents a share. 3 cents a share. And I think I bought 10,000 shares of it at 3 cents, just hoping that something good would happen. And it was down at 1 cent, so nothing good has happened. That's a bad price earnings ratio. But if I buy it at 3 cents and it goes up to 4 cents, well, that's only a 1% increase. But if you buy 10,000 shares and you increase it 1 cent, you're still going to make $100 on 1 cent. So, you know, if it goes up to 10 cents, man, life's good, isn't it, Gregor?
What's an average stock?
Oh, I'm going to, no, 20, 25
Cents.
dollars. It's pretty average. It all depends on how big your company is and how many shares of stock they have out there. All right, so 15.2. That's pretty simple stuff, right? We all got that. 15.3 is also very. I think we'll get this done in 10 minutes. 15.3. There's not much to it. 15.3. Now that we're dealing with the stocks, we are Interstate Tires. They use some real easy numbers. So we need to have a statement of stockholders' equity. In the previous unit, we just had a sole proprietorship, so it was a statement of owner's equity. This is, we have capital stock, so it's a statement of stockholders' equity. Statement of stockholders equity, and this is for year ended December 31st, 2013. And in the book, this is another one of those things that I want you to use the book when you're in your test, no matter what, so that you can see how it actually all lines up. So the example is on page 462, and it will give us how everything is supposed to look. So the first thing it says, and it's a good thing to have open because then your instructions are on 463. So the first line says capital stock. So we'll just write that in. And par value means standard normal value. So it tells us 100,000 shares issued, has a par value of $1. So I'm going to write $1 par value. Okay, and then on January 1st, 2013, how many shares do we have issued? 100,000. As of January 1st, Interstate Tires Inc. has 100,000 shares of capital stock. Okay, so 100,000 shares issued. So in this, all you're going to do is you're going to take the $1 times the 100,000 shares, and you're going to get what? 100,000. Let's go on in the second column. Okay. Next line says, issued during the current year. Now, throughout the year, sometimes you run into problems and you need more money to keep operating your business. So you got a couple options. Number one, you can get a loan from a bank. Number two, you can put out more shares and sell them and use the money that you get from selling the shares to operate your business. We had 10,000 additional shares. And 10,000 times 1 gives us 10,000. So our balance for December 31st, 2013 is 110,000 shares. And all you do there is I'm going to add 100,000 plus 10,000, and I'm going to get 110,000. Okay. Now, the other section that we have is retained earnings. And retained earnings is basically the catch-all account that stores the money that is profit that you're not issuing to shareholders. So it's basically your reserve cash fund. So I've got a cash account that has my normal cash flow going in it, my day-to-day operations, and then I've got retained earnings. Retained earnings is like the stockpiled money that I'm not using for paying dividends. I'm not using for my day-to-day operations. I just have that in there in case things go bad, and that's kind of where my worth builds up. So my balance on January 1, 2013, I get from my worksheet, which is missing. If you're on your own. Anybody got the, oh, here we go. Okay. Here's the work together. Here's my worksheet. And my balance of retained earnings is right here down at the bottom. 46,599.48. So that's where I'm going to put right in the middle. 46,599.48. Okay. Now I'm going to dump all of my net income into retained earnings. After federal tax. Well, that is $62,907.35. We put that in the first column. 62,907.35. it tells us that we declared a dividend of 8,800. You see where it says that in the book? Where does it say that in the book? No, in the work together part. Do you see where it says declared dividend of 8,800? You don't see that? I don't either. You look on the worksheet and it tells you there. Dividends is your account. The amount is 8,800. So less dividends declared. It says less, so what would you anticipate we do, Mr. Draker? Gives us a net increase. Our net increase is 62,907.35 minus 8,800. Totals up to 54,000.
107.35.
Do I have confirmation on that? Okay. So this was my previous balance. This is what I'm increasing. That's going to give me a new balance, not the shoe. Oh, you guys are tough today. That was a funny joke. Not the shoe, new balance. I said new balance. Come on. Come on. That's hilarious. So I'm going to add 46,599.48 plus 54,107.35 gives me 100,000 even and change. $100,000 7 0 6 83. Yeah. And that's going to give me a total
210, 706,
stock holders equity of 210 706 83. Double underline. That's 15.3.
Caps of the day.
I told you 15.3 is pretty simple, right?
Do 4.
Should we do 15.4 right now? Should we get a start on it? Dinnerman, yes? No?
Sure.
I like Dinnerman.
15.4. A little bigger.
Well, balance sheet issue. Yep, 15.4. A little bit long.
That's it. Test Friday? Or test Wednesday? If we're